We're going to be putting it together in terms of, we did the appropriation account. We have added the capital and the current account. So just a review. Remember that we have the partnership business, and the appropriation account is the partnership business appropriation of profits from the partnership's point of view. So what happens in terms of net profit, whether net profit increases because you have received money, the business has received money, that will be added in the appropriation account. And then we have what is decreases the profit will be lessened from the net profit in terms of the appropriation account. So that is from the business point of view, appropriation account. What we just did, we did the capital accounts, more specifically the current account, which is now from the partner's point of view. So we had learned, in business, you have where they are seen as one entity. For accounting, just a reminder, because of the rule, the business entity or the separate business entity rule, we have to have the owners and the business accounted for separately. So where the appropriation account is from the business point of view in terms of adding to profit and taking away from profit, the current account is from the partner's point of view in terms of adding to their capital or taking away from their capital, which is recorded in the current account. So you would see the separate entities, different perspectives, which means that they are going to be the opposite of each other. What adds to profit, because the business has received money from the partners, will take away from the partners. So which is why what you do in the appropriation account, if you add something in the appropriation account, you will minus it in the capital account. So here it is to see it visually again. The appropriation account from the business point of view, we have profits first. We have after interest. Interest on loan takes away from your profit because it is an expense. So you would take it away from your profit. And then you add your interest on drawings because you are receiving money. Remember, we are looking at it from the business point of view. So you are receiving money, so you would add to it. But everything else is what we pay to the partners before we actually give them their final profit share. Okay, so you would see here, the business pays the interest on capital to the partner, so it is less. They pay the partner salaries, so it is less. And eventually what remains, they share out amongst the partners. From the partner's point of view, which would be the current account, which represents their capital that is changing, what you would see, what was received by business from the partners that was added, which was the interest on drawings, you would see in the current account, it is minus, right? So it is taken away. How do you take it away in an account? For a capital account, you put it on the debit side. So that is why you would have interest on drawings on the debit side. Drawings also takes away. So even though drawings is not in the appropriation account, you have to put it into the current account because the partners have withdrawn some of their capital for personal use, which means that they have decreased their capital. So it is on the debit side. So you would notice on the debit side, once again, you have your drawings and your interest on drawings. And then everything else, because it decreased capital from the partnership business point of view, for the partner's point of view in the current account will be the opposite. It would increase their capital. So everything that is lessened in the appropriation account, you would have it on the credit side of the current account. And that is made more clear as we do the example. 4.7, A and B. A was to do the appropriation account, which once again is from the partnership's point of view, the business point of view. And then in B, you had to do the current account, which is from the partner's point of view. So appropriation account, business point of view, the partner's current account from the partner's point of view. Okay, so let's go into the activity and correcting the activity. What am I call it? So appropriation of profits. For this question, most of you got most of it right, but there were some little points that I definitely need to go through with you. First detail that people made a common mistake with, which we are going to emphasize, is the profit and loss is the profit after interest on loan. Now, most of you, the majority, realized that you had to take away the interest on loan. Where the problem occurred is that you didn't know how much. So a lot of you went and you minused 5,000 if you minused anything at all. So the 5,000 was a common mistake. 5,000 is not the interest, it is actually the loan. So that means that to find the interest, it would have had to be the 4% of the 5,000. So that is the first thing that we would have had to do. Only one person made this mistake where they knew it was 4% of 5,000, which is 200, but then they got tied up and they went and they put for 2 years. You're not supposed to multiply by 2, so it's not 400. Remember, we are doing the appropriation account for the year, and the percentage is an annual amount. So in the future, if you see a period, all that period does is tells you whether it is a non-current liability or a long-term loan, or whether it is a current liability. So that is all that information gives you. Nothing in terms of calculation. You always only calculate for the period. And the period in this case is for the entire year, so it will just be the 4% of the 5,000. So that was one of the things I have to point out, emphasize. The second thing that have to be emphasized, because quite a number of people made this error, but then on the bright side, quite a number of people got it. So they recognized it. Very good. It is for the year once again, and the salary they gave was for the month. So for questions in the future, even though most past papers, especially recently, have been kind to you and they've been giving you the annual amount, look out for monthly. When you see monthly and it is for the year ended, one time remember to go and do working and multiply by the 12 months. So having pointed out those two common mistakes, going to go into the actual doing of the question, and we will do it quickly. So you put the name of the partnership business one time, and you state what we are doing, which is the appropriation account for the year ended 31st December 2010. And then you have your dollar signs, and this is the format that I use. What you can do is you can put net profit after interest and show the working as some people did, or you can do it like me and put it, if you see like it has enough space, put it in this order. So I am putting it clearly in this order for you to see, so you know exactly what was done. So they gave you the before. So once again, when you see before, boop, alert, that means you have to take away any interest. So you will look for the interest. So basically, net profit before interest would have been profit before interest, 3,900. So you put your 3,900 there. You less your interest, and your interest would be 4% of the loan. So you saw here that they had an interest, no other interest but the loan from Bain. So you looked, interest, 4% loan. The amount that he lent the partnership was 5,000. So the interest, 4%, 4% of 5,000. And then you will have 200 as your answer, which you will minus. When you minus that, 38,900 represents the net profit after interest. The next step that you do, add interest on drawings. So when you add your interest on drawings, most people got this. This was real nice and easy. You put the partner, you put the working. There were no dates in terms of the drawings, which means we assume that it was for the entire year. So it's just simply 10%, 1270. Everybody got this, had no problems with this one, 930. Okay, so this is the 10% of the 12,700, 10% of the 9,300, which would be your drawings. So your interest on drawings, 10%. Your drawings, you look for drawings. You see C-Win's drawings, 12,700. So that is why it was 10% of 12,700. T-Bain, you look for his drawings down here, 9,300. That is why we have it as the 9,300. Have your interest, put your total there. Then you move on to interest on capital. So your interest on capital, C-Win, interest is 10%. The capital, you look for your capital. So you're dealing with win. So it will be, look here, find capital account here. So it is your fixed capital that they're looking for. So you got capital account 35,000. So 10% of 35,000, 3,500. And then for Bain, you look for his capital and you will see his capital that's current. His capital down here, which is T-Bain's capital account, 25,000. So 10% of 25,000, 2,500. And that is good. You move on. You add it up. You have the 6,000. This time I put brackets. It doesn't matter as long as your ending figure is the one in brackets. We good? So 6,000 is your total interest on capital. So now you move on to salaries. Once again, the monthly salary, it's monthly. So that means for C-Win, it will be the 1,200 multiplied by the 12 months, and you get 14,400. And you do the same for T-Bain, 800 monthly multiplied by 12 months to get the year, 9,600. So you add that up and you have 24,000 as your total salaries. So these two figures that have to be lessened, you add it, you put it in the third column, and then it will be the 38,900 plus the 2,200 minus the 30,000, and you should have gotten 11,100 as your figure. Okay, so then the next step, I'm not seeing anything there in terms of how you allocate your profit. So because they did not state how they do it, most of you, once again, even if you had the correct answers on top, once you showed your working, you would have gotten marks for doing it equally, sharing your profit equally according to the Partnership Act. So once again, once you don't see any agreement, you just go and you do it half, 50%, 50%. So it will be half of the 1,100 and both of them get the same amount, which is 5,550. And that is your answer for your appropriation account. So then the second thing that you had to do was the current account. So doing the current account now, of course, you start with the name of the partnership business. You state what it is. It's a current account. You put date, details, and the name of the partners. Win and Bain is okay, right? In the exam, they're not going to kill you if you leave out the first name. So on both sides, you have the year 2010 is the year you're starting with, and you have your dollar signs for to show that it is the monetary amounts. Okay, so I will do it in the order that I usually do it in. Of course, the first thing you must do would be your balances. So you have to check and see, are there any balances for the current account? So you go to your list in your trial balance, and you're looking for Wayne, or well, Win or Bain. Hey, Wayne, I merged them. Anyway, right, when you're looking for his current account, and you find Win here, current account, and you find Bain's current account. So therefore, there are balances for their current account. With Win, 750. This was a common mistake. Once you got past the fact that you had to put a balance, which was good, most people then proceeded to put this 750 on the credit side. This is a trial balance, which means that even though they did not put debit and credit on top, just the fact that you have certain amounts under this column and certain amounts under this column, it is understood that it is, as a trial balance, debits and credits. So the fact that the 750 is under the debit column means that you have to put it on the debit side. As I had touched on before, and now we're going more into the detail, if a partner overdraws his current account, which means he takes out more money than he had in the current account, that means he will go into the debit side, overdrawn in this case. So that is what happened with Mr. Win. He took out more money and he ended up with debit balance at the start of the period. So you're going to go on the debit side. The start of the period is 1st of January. Balance brought down. And for Win, it will be this 750. Okay, so I hope everybody who put it on the credit side understands why it is on the debit side. It states so in your trial balance. Okay? You don't have to know that he overdrew and all that unless they ask you further on. All you have to know is that they put it on the debit side, trial balance. If you see it stated, it's a debit balance. Once again, it goes on the debit side. Moving on to T, Bain. His own is on the credit column. So he is normal, and he's going to be January 1st, balance brought down 1750. So most people got that part right. The thing that you had to correct would be the 750 debit balance. Okay? So the next thing that I usually go into would be drawings. You will see Win has drawings of 12,700. Once again, most people got this right. So no long explanation for it. Drawings on the side because it decreases your capital. Next things are the things that you actually calculated in the appropriation account. So what I usually do, I kind of leave interest for loan last, which most of you did, or second to last. I go to drawings. We already, no, we have not. So interest on drawings, you have it here, you add, so it goes on the debit side here. So both drawings, the drawings and the interest go here. So you put interest on drawings and you simply copy what you have here. For Win, it is 1270. For Bain, it is 930. Simple, move on. Everything else in the appropriation account is less. So that means you're going on this side now, and everything else you're going to input on that side. Very nice and easy. This side according to the perspective, right? So you're going on the credit side, and in any order, So I just go in the order, interest on capital first. You can put it in any order that you want to, as long as it's on the credit side after your balance. Interest on capital, you just copy what you have in your appropriation account. Salaries, you just copy what you have in your appropriation account. A lot of you, even if you got the salaries wrong, you would notice that your marks were still high. That is because once you put exactly what you got here in the account, whatever it is, even if it is the wrong answer, once you put what you have here on the credit side by salaries, you're getting the mark. So simple as that, you copied it. Share of profit. Did I do share of profit first? No, I think I went to interest on loan, but some of you went share of profit. As I said before, it does not matter what the order is. So I went on the interest on loan. And the interest on loan, how much was your loan? 200. So you see it clearly here, so 200. And who was the one that got the interest? It was T-Bain, so that is why the 200 was T-Bain. Once again, most of you got that even if you had 5,000 or 400 or some kind of weird number. All righty. And then I like to leave my share of profit last. Once again, you simply just copy exactly what you got here. Whatever the amount you got, even if it is incorrect, once you put that same figure here, you're going to get the mark. So this is the corrected transactions for your current account. Now we're going to balance, and everybody knows how to balance. So decide where the most, and you just put the same figures on the other side, and then you find your missing figures, which would mean this should be your answer. And of course, you will go to 2011 and bring down those balances. And that is it for your current account. We are going to move on to C, which you did not have to do. When they ask you for a statement showing net worth, they are basically asking you for a statement showing capital. And which statement or document or account do you know that shows you your total capital? That will be your balance sheet. So basically what they were asking you for C is just the extract for your balance sheet, the part underneath for your balance sheet, right? The capital section of your balance sheet. So the net worth of a partner is the sum of the balances in the capital account and the current account. So which means that you will do the extract, the bottom part of your balance sheet, to show that statement that they asked you for. Very simple. This is only 2 marks when you think about it. So what they were asking you for is basically, what is your capital account balance for each partner? What is your current account balance for each partner? And that's it. That would have been 1 and 2 marks that you would have gotten for your total. So doing the balance sheet extracts, just putting it formally. This is your format. So on page 106 and 107 have balance sheet formats. The difference below here is that this one, when you do a current account and a capital account already, all you have to do is to put the balance in the balance sheet. I would show you when the other one is necessary right after we do this question. Since we did a current account, that means that we simply have to put the balances. So we're going to go across here, finance by, and we start with the capital account. Also, It is capital that we're going to calculate. Instead of putting partner one, partner two, and then partner one, partner two, if you realize it creates a lot of space utilized. So you're utilizing a lot of space as you're listing it. Plus, you're writing the partner's name twice. So what we do is like what we do in the current account where we use the columns. So what I did here is capital, and I put the name, I use the two columns for the partners. So you can do it like this, you will still get it correct, or the shorter way, the shortcut in an exam when you're with time, use your columns like this, so you can copy down this method here as well. And then you go and you put your capital account, and you just put the amount. So your capital did not have any additional investments. So which means that your capital account would be the same 35,000 for win, yes, for win, and 25,000 for Bain. So you just place it under there. And then you simply just go, I just put a total here one time, not necessary, but I put it one time. So 35,000, 25,000 necessary. And then you go to your current account. Your current account balance is no longer what is in your trial balance. The balance that you would use for your balance sheet would be the new balance that you calculated when you did your current account. So which means that your new balance is 8,730, 9,370. So for win, 8730, and for Bain, 9370. And this is, and you would total these two, and that is your answer for C. Okay, so as simple as that. So I did my totals. I totaled win, his net worth is 43,730. Bain, his net worth is 34,370. And well, the total capital would be the 100. So the last thing for your partnership is the format. The format for the balance sheet for your partnership, the top part, same. If you went through it all in your books and you looked at it, you would realize it's the same format. So if they even did ask you to do the balance sheet, you would do it just like you would do for a sole trader. The only thing that changes is the capital section, the financed by section, which is why they would usually ask you for that if they're asking you for any final accounts. Okay, so we showed this one. This is the way that you can put it, or using the table as I showed you, the columns as I showed you, where you put the name of the partners and then you just put their information for capital and current accounts. And then of course you do the same thing with your long-term liabilities. This one is whenever you have done a current account and or capital account already. You simply put the balances. The one on page 107, you would see that that one is different. This one is if they did not ask you to do the current account, but they asked you to do the capital section of the balance sheet, especially if you see that it goes for a lot of marks. It is not going to just be these balances. In fact, you're going to need to do this way because you will have to work out what the balance is for the current account and for the capital account. If you understand what I'm saying. So once again, if you do a current account and capital account, you have worked out your balance already. So all you have to do is to put your balance in the balance sheet. But if you have not done the accounts, that means you have to work out the balance. And where you work out the balance is in the balance sheet, the capital account section. by putting all these details. Now you'd realize this one, I think it is absolutely necessary to use the columns, because if you didn't, this would be way too long, right? It would take up way too much space and way too much time constantly repeating the partner's name. So you would just use the columns, yeah, write the partner's name once, and then your details. Just like with the sole trader, you have your opening capital, you put your opening capital. That is the balance at the beginning. If you had any additional investments, you will put that in here, additional investments, right? So that is for your fixed capital account. Remember, we have a fixed capital account, and then the current account deals with the changes like the profits and stuff like that. So we're not going to add profits on top here like a sole trader. So opening capital, any new capital introduced, and then you go to your current account. You have your opening balance, which within our example would have been Win, and Win would have had 1,750, and Bain would have had the negative 750. So you'll put brackets for that one. I hope I have the names correct in terms of that. That is your opening balance, whatever they gave you in the trial balance. And then you would add your interest on capital from your appropriation account, add your salaries, you're putting it under the partners column, add your share of profits, and then less your drawings and less your interest on drawings. Okay, so that is basically it. You just have to learn it off. But it does follow the format for your sole trader, where we had opening capital, add a profit, less drawings. It's just for partnerships, we have these additional things like the interest on drawings and the interest on capital, and the fact that we have to share the profits, and it's not just one net profit, we have to share it. So you have to break it up. That's the only difference. So this is a format that you will just have to practice. Okay, so what I would like you to do for your activity, probably in your notebooks, is you are going to prepare the capital section for the activity we just did, Win and Bain. But instead of the simple capital section, you are going to do this one with all of the details. In other words, we are going to assume that we did not do the current account, and they asked you instead just to do the capital section with all full details disclosed in that capital section of your balance sheet. And then you will also do next activity, which is 4.8, in where you will be required to do an opening journal in A. Then in B would be the appropriation account from the partnership business point of view. And then finally, you're going to do the current account, which is from the partner's point of view. And that is it for the lesson today.